Hey guys, welcome to a new video. On this video I'm going to be doing a very quick tutorial on candlestick patterns. What are the bearish candlestick patterns and the bullish candlestick patterns, where they signal for trend reversals. So if we are coming from an uptrend, and then we can pay attention to how the candles, what the candles are doing, what patterns they are forming. They will give us information as for if this could be the end of the trend and the trend would reverse. So the first example is going to be the bearish engulfing. Let me write this. So the bearish engulfing would be exactly this type of pattern. These two candles here, where you see that we are coming from an uptrend, and then we get a long, nice green candle, and then next to it a red candle that it's the body of the candle, it's bigger than the previous green candle. So you could fit the green candle inside this red candle here. It opens a little bit above of the closing price of the previous candle, and it closes below the previous candle, and for even more confirmation it actually closes below the previous candle. So this is a very bearish signal where you should take in consideration selling there. Of course, candlestick patterns are not to be used alone. You need other types of confirmations. You don't trade only in a single confirmation. You want to use trend lines, support and resistance. You would be looking at the RSI maybe. You need a few different indicators confirming that this could be the beginning of a downtrend or a trend reversal. The bullish engulfing would be exactly the same, but the other way around. We would be coming from a downtrend. I don't have any here, but you get the idea. It's exactly the same, but you come from a downtrend, and the last candle is a red, big, nice candle, and then the next candle will be a green candle, bigger than the previous green candle, and it's even better if it closes above than the previous candle. So if you can fit inside that candle the three previous candles, that's a very strong signal. So it's basically the same as this, but the other way around, with this being red and this being green. I hope this is clear. Okay, the next will be the shooting star. Is bearish, so I didn't put it here, but the shooting star is bearish. So it's a signal to sell, and the hammer is a bullish, so that's a signal to buy. So the shooting star is, as we can see here, it's like the opposite than the hammer. So it's a small body candle with a long shadow in the upper part. Okay, and the hammer is the other way around. It's a small body candle with a long shadow in the downside, which looks like a hammer. That's why it's called hammer. And yeah, the shooting star is the other way around, like a hammer upside down. So when you see this type of candle pattern, the shooting star is a very signal, so you could sell, because it represents that the uptrend could be finishing here and it's going to start to go down, and it happened here. And for the hammer, it's bullish. When you see a hammer and the next candle is green, then it's signaling that the downtrend it's finished, and now we're going to start going up, which it worked perfectly well here as well. And this is actually the current candle for gold as of today. This is the chart for gold, one-day candles. So this candle here, the shooting star candle, was the candle closing on Friday when the market closed, and this is the candle for today, Monday, opening in a red candle. So these signals that gold is going to be going down in a downtrend. So I'm gonna be waiting for this candle to close today, and maybe tomorrow I will place a short position here for gold. If the trend reverses here, it's no secret that this the gold was overextended here, so it was overdue for a little correction. So I will probably tomorrow, I'm gonna want to see how this candle closes. But if it's a big red candle, if it closes more or less halfway of this green candle here, halfway or below, so somewhere where it is right now, if it closes at this level, I will probably place a short bet and to take profit here. When it touches moving average, I would put a very tight stop loss actually, because if it reverses, that's all it takes for me to realize that I was wrong. So probably something like that, with a 5% profit versus a 1% loss. Okay, sorry, going back to the subject. The next candle pattern is that it's called dark cloud cover, and it's a bearish signal to sell. And we see this a lot, not only in crypto but in every chart. When we get a long red candle after an uptrend, and then we get a red candle that is the body is the same size as the green previous candle, and that is a trend reversal signal where you should be selling. We see this here in this two, we see this here in this two, we see this here in this two. Okay, it happens right before the trend reverses. Okay guys, so that's all for the quick tutorial. Thank you very much for watching. I'll see you soon. Bye.